A powerful tool. Candlestick patterns are like little windows into the minds of traders. They give us insight into the emotions and behavior of market participants, which can be incredibly helpful for making smart trading decisions. The chart is made up of candles, which represent the price action of an asset over a given period of time. Let's break down a candlestick. The body of the candle, which represents the opening and closing prices of the asset during that time period. The shadows or wicks at the top and bottom of the candle, which represent the highest and lowest prices reached during that time period. In most cases, if the candle is green, it means the closing price was higher than the opening price. If the candle is red, it means the closing price was lower than the opening price. However, candlesticks can be any color, depending on the preference of the trader. The top wick represents the highest price that the asset reached during that time period. The bottom wick represents the lowest price. But how can this help you to analyze the candlestick chart? The formation of these candlestick charts creates different patterns that traders can use to attempt to anticipate the future market movement. For example, a specific candlestick may indicate an upward market trend. Hence, if you see a long bullish candlestick pattern, it is a positive signal that buyers are optimistic and confident about the market, which may present an excellent opportunity to buy. On the other hand, if you see a long bearish candlestick pattern, it's a sign that sellers are in control and that there's some fear and uncertainty in the market. In this case, it might be a good idea to wait before making any big trading decisions. There are many more candlestick patterns that traders can use candlesticks to identify patterns and make predictions about where the price is headed next. Here are 3 sets of candlestick patterns to remember. The hammer and hangman, bullish and bearish engulfing, morning star and evening star. By understanding candlestick patterns, traders can make more informed decisions about when to buy or sell an asset. However, it's important to keep in mind that candlestick patterns aren't the only thing you should rely on when making trading decisions. It's also important to consider other technical indicators, fundamental factors, and your own risk tolerance. But by paying attention to candlestick patterns, you can get a better sense of what's going on in the market and make smarter trades. Subscribe to our channel for more videos like this.